So, as they say, best for last. So I'm the reverse Pareto. So really low bar. We'll work our way up to the crescendo. When Jeff asked me to speak, certainly your first question is, what does an investor have anything to do with talent? And rightfully so. What you'll see, and we'll go through a little of the background on Jump. I'll talk a little bit about venture and how it applies to this, because some of you in the audience have a pretty diverse audience. Don't necessarily have the perspective of how venture applies to it. And then we'll talk about a case study, because I thought it'd be relevant based on how we look at talent in an operating lens kind of environment. So a little background on me and Jump. Jump is a venture firm I helped start about 5 years ago. Jump is operating lens in a lot of ways. We've started or run about 14 companies, and the thesis always was that type of lens gives us a different perspective sitting on both sides of the table. So think of it as when you're a Series A or B investment, you're typically somewhere around 15 to 40 people, you're growing really tremendously, and you really need somebody that can say, hey, I've been there, done that. I've been there when your top salesperson left, here's what you do. I've been there when the servers went down or when AWS goes down or whatever the case may be. So that's really the thesis. We write $5 to $15 million checks typically. So when we hand over the cash, as you can probably guess, 85% of the proceeds goes towards people. We're not investing in server farms anymore because of AWS. We're not investing in hard equipment. Many times it is a little bit of space, and usually it's all about people. And then most importantly, I think the thing I'd highlight about Jump is that we're a national firm. And so we are Chicago-based. We have a San Francisco and a New York office. We have a Midwest orientation. We love to give it that aw shucks kind of approach. But at the end of the day, we do look at companies nationally. And so some of the companies are here in the audience, one of which is speaking alongside us, but just wanted to give kind of a little perspective of how Jump works. So venture, and venture more specifically for Jump, means when do we enter as a Series A or B investor? And when we come in, typically we look at how do we help this company scale? And we call it expansion stage. Everybody has a different kind of way to kind of market it, but at the end of the day, you're somewhere between 15 to 40 people, you're somewhere between 1 to 7 million in revenue, and you're typically trying to scale like crazy. You're growing 1 to 3 times a year, and you're usually trying to add to your team 2 to 3x in that first year. So think of the premise, if I hand you over a $10 million check to a company, and you're going to go from 15 employees to 50 employees. And usually in the first, not even year, it's usually the first 100 days. And so that scaling problem is really difficult to figure out. And so when we go through this, I'll go through a little bit of the methodology of how we think about investing, which leads into how do we invest in Rockstar CEOs that can actually go recruit Rockstars, and thereafter. The one thing I'd want to highlight is the differentiation, because I think in private equity, people have a different perspective than venture. And one big piece, that we're minority investors. We're partners. I say go Jump, they may or may not return my phone call, my email, or the like, let alone say how high. When you own 20% of the company, you're there to be a partner, not to dictate what happens. And so your way is not necessarily the highway. And frankly, for Jump, we tend to focus a lot on investing with syndicates to make sure we have the right people around the table. So how do we invest at Jump? And so, like every venture investor, lots of acronyms, lots of cliche phrases, and certainly lots of movie quotes. So you'll get a lot of that throughout the presentation. But 5 M's. 5 M's, market, obviously is it a big market? Is there a tailwind behind it? Is it something we want to invest in? The model, are they going after the right part of the value equation within that general marketplace? 3, management, is this the team that's going to take it from point A to point B? 4, momentum. Momentum meaning sales momentum, product momentum. Do they have that tailwind behind them? This is not a turnaround type of investment. We don't spend the time trying to fix something. We just want to enable what they're already doing. And then match. And there's a lot of ways to look at match. Match can be, do you have a personality match? Do I want to go have drinks and dinner with this person? To, is their valuation expectations out of whack? To, can I provide a value add? And of course, as you can probably guess, for this crowd especially, we're going to focus on door number 3. But the reality is for Jump, when we look at those 5 buckets, 3.5 of them are pretty easy to discern, or I should say, pretty easy to kind of quantitatively and qualitatively figure out. Because at the end of the day, when you're looking at, and the one that's a little difficult to figure out sometimes is momentum. Momentum, to figure out if they really do have sales momentum, they have that product market fit, if they're really going to grow from point A to point B. But management is really what it's all about. And for management, it's about judgment. And for judgment, we're talking about, these are not fighter pilots, as we always joke about. These are people that you're entrusting with $5, $10, $15 million of capital to grow the company tremendously. And it's less about, are they going to be good stewards of capital? That is like the ante in this game of poker, to be able to say, you're going to be disciplined and you're going to have high integrity to deploy this capital. That is kind of basics. It's not about strategy, because at the end of the day, strategy is usually determined at a board level. It's usually about, do you recruit the right people to take this bus from point A to point B? Again, a lot of good analogies and references in that one. But I would say that the one thing that we really focus on is their judgment in recruiting. And so when you look at recruiting talent as a CEO or bringing on the best and brightest, we call it talent as a core competency. And the basic premise is, of course, we're enabling you, we're partners in crime, and we're going to have those discussions as frequently as we can, but you need to go out and find the best people for your team. So, of course, there are like 6 or 7 different traits that we look for. The first one being transparency. And this is the simple, I'm not there every day, my team's not there every day, and no matter how involved we get, and you'll hear from Katie from Narrative Science, who we're an investor in, Stuart lives 5, 6 blocks away from me, and I'll grab coffee with him, but I still am not there close enough to know what's going on and who are you really recruiting on a day-to-day basis. And so it's that, tell me the good, the bad, the ugly. I want to know everything that's happening, but make sure that I'm not getting it filtered just because I'm an investor. And if you can't tell me the bad and the ugly, we're probably going to have a different relationship. 2, the strong selling capability. The way I always think about it is, when you're an entrepreneur, you initially sold your spouse or your family to even go on this crazy journey. You usually sold some investor to give you money. You've sold customers to get some traction. And of course, you need to sell people to join your team. And if you don't have that trait, it's going to be really difficult to go through that entire journey as an entrepreneur. 3, systematic approach. Again, everything from scorecards and other mechanisms. You hear a lot about how people do it from the other speakers, but we look at it and say, do you have a systematic approach, or is this kind of just ad hoc? Do you just come into meetings and interviews and just try to figure out, just based on a good chat, whether you should hire them? Self-effacing, and for me, that's just an overall trait, but it's super important when it comes to talent, because when it comes to talent, you're trying to find what are your gaps and how do you supplement with people. And from my perspective, that is so important to understand, do you have faults before you can actually fill those voids? And you'd be shocked at how much that there's a gap sometimes. And then hard decisions. For me, hard decisions is an easy conversation to have. Do you make those hard decisions? And it's that balance between loyalty and metrics driven. Because frankly, loyalty is one of the strongest attributes we have in entrepreneurs. But there comes a time when you need to kind of balance that with what's right for the company. And I always equate it to, it's not just making hard decisions, it's doing it swiftly. It's the car crash analogy. The premise that when you have a broken arm afterwards, do you really believe that you should have pressed on the brakes? Well, that's great afterwards. But being at the right time or earlier in the process, you need to make those decisions and you move swiftly. And then the last one, of course, is just connecting dots. So I thought, like any speaker, what would actually resonate with this audience, which is actually taking a portfolio company. And so 4C Insights, a Chicago-based company, some of you may know them. And for full disclosure, I did get Lance's approval before I did this. Lance's company was actually founded by a professor out of Northwestern. Alok is a brilliant computer science genius, ultra-scale computing applied towards marketing and ad tech. Really just a brilliant team. When we walked in, there were about 1.7 million in revenue, about 20 employees. I think it was closer to 17, but we're going to round up a little bit here. And they really were on a path to try to scale this tremendously. And so when you look at raising $5 million in capital, starting with a base of 20 employees, and really 70+% of the team was technologists, which is usually what we see. They usually have an orientation towards, how do I build a product, not scale it. And so, of course, this is in, I think, the IVCA template Maura provides. Page 4, show a hockey stick in growth and revenue. I'm sure everybody sees this. And then, of course, there's the pro forma that supports that, which is how do you go from point A to point B, all the details that come with it. In this case, they were talking about going from 20 employees again, 17 to 20, somewhere in that range, up to 55 in year 1. Again, really tremendous growth percentage-wise, but you also have to think about the type of people they're hiring, leadership, and the strong skills that they may not have, like commercial. In their case, they were actually trying to go to 87 by this time of year. Right now, they're at 190. So think about that growth, 20 to 190 in 2.5 years. Really tremendous growth, and comes with it a lot of problems. And then, of course, there's the org chart, right? You get like this, I don't even know if that's an org chart, it looks like a flow chart, actually. But you get this flat organization of 20 people that are kind of utility players. And utility players more so that they all have titles, but they all are doing a little bit of everything. And so you start getting into how do you get into swim lanes versus just getting the job done? How do you ensure you organize for the long term? And do you have the right people around the table? And this is a company, just as reference, had, I think, 2 offices, New York and Chicago, and now has 8, including 3 internationally. So just adds a lot of complexity, a lot of colors, and a lot of little boxes on that chart. So what do we focus on? And I won't go through each detail because I'm sure I'll get a sign at some point saying I'm running over time. But when we look at it, there are a lot of questions that we ask. I would say there are 4 or 5 here that really kind of stand out. And I would say that as an investor, we tend not to say, hey, now we're going to spend the next 6 hours on HR. We tend to be more staccato. We'll come in and ask random questions throughout the process that help us amalgamate a kind of signal that we can you use as an investing signal. And so as an example, I'll come in and say, you're going to go from 20 to 87 employees. Tell me how you're going to do that. Walk me through how you're going to grow the company, and specifically what order of events are you going to hire these people? When are you going to hire a head of HR? When are you going to hire a head of sales? And as reference, this is a company that just added their head of sales about 6 months ago. So they definitely progressed at a different pathway, and every single company is unique. Every chocolate's different. When you look at talent, one of the things we always look at is also, how do you think about recruiting talent? How do you leverage your network? How do you go out and recruit? And our view is really simple, that when you go recruit, you should always be recruiting, first of all. 2, you always leverage your network. These are simple facts. But then we talk about recruiters and using headhunters. And do you use it as an outsource mechanism, or is this top of funnel? And for us, we really want them to kind of show that they're using the same mechanism like you would in marketing. Here's the funnel in marketing. How do I convert people? But how do I fill it with really great talent by leveraging headhunters and recruiters? Because our view, at the end of the day, is if you outsource it, you're outsourcing a core competency for the business. And then my trick question, of course, who leads recruiting on the team, which this has got a Glenn Gary, Glenn Ross kind of approach. Everybody should be recruiting, but the CEO owns that. At the end of the day, when you're a CEO, you have 2 major jobs. You have a lot of jobs, but 2. One is to give optionality to the company, and that includes getting capital, relationships with investors, making sure you're looking for exits at some point in time. But 2 is to go make sure you have the right team on the field. And then the last one I'll highlight is certainly that self-assessment on org charts and the like. Being able to scale a business from 20 to 55 to 87 or 190, to be able to understand and assess whether not only do you have TBHs on your org chart, here's who I need to recruit, but do you have specific skills that you need to supplement? So do you have somebody that is great at a 50-person company and that may or may not be in that right role when it's in 190? And conversely, do you have the skills on the team that you need to supplement with a new function or a new leader? And so when you go into the company itself, and I'll kind of hit some of the, So when you go into the company itself, let me give a couple reflections, and of course the spoiler alert, we did invest in the company. It was a pretty rigorous process. We usually, from start to finish, from meeting a company to when we invest, it's usually 6 to 9 weeks. We usually look at it from the 3 legs of a stool. From the 3 legs of a stool is, do they have a commercial brain on the team? Do you have a subject matter expertise? And do you have that, somebody that keeps the train running on time? And they had 2 of those legs of the stool. So for us, it was a key piece in the first 100 days to fix that. 2, another aspect we thought, they were great at recruiting. They were really good at selling. They had all those traits, but they really didn't have that capability to make hard decisions. And then the last thing that I'd highlight is, do they have that self-effacing? And for us, a key piece was they knew when they had issues and had the ability to kind of extract other talents to join the team. And so for us, when we went through this, the takeaway was one, in the 100-day plan, let's take some of these takeaways and kind of enable them, bring on new independent board members to kind of supplement what skills we thought they were missing, including making hard decisions. And then let's also build a plan for HR that we can help them supplement the areas functionally that they were missing, like head of sales, like head of product, and so forth.